And by thanking our witnesses for being here today and taking your valuable time to provide insight into a really important issue. Your participation is critical to helping us understand the challenges and opportunities facing our insurance markets and the important role that mitigation policies must play in protecting American communities. Over the past year, Americans from the Carolinas to California have endured catastrophic natural disasters. From hurricanes like Hurricane Helene and Milton on our East Coast, as well as the fires happening in South and North Carolina recently, to the devastating wildfires across Los Angeles County. These events have once again made clear the enormous human and economic toll natural disasters cause and the urgent need for better pre-disaster planning and a more resilient insurance market. For families across the country, insurance markets and insurance is not just a financial product, it's peace of mind. It's knowing that if the unthinkable happens, they'll have the support they need to rebuild their lives and to recover. But today, more Americans are finding that that coverage is either unaffordable, unavailable, or both. This is a problem that affects every American. As someone who spent most of my career outside of politics in the insurance industry, I know firsthand how critical a well-functioning insurance market is to our economy. I also understand the delicate balance between offering affordable products and properly pricing the risk. Insurance markets must be allowed to function properly. They should be based on sound actuarial and underwriting principles, not artificial mandates that distort prices and ultimately hurt consumers. Unfortunately, in too many states, government regulations have made it nearly impossible for insurers to price policies based on actual risk. In California, for years, insurance regulations prohibited the use of catastrophe models and restricted insurers from including the cost of reinsurance in their rates. From 2012 to 2022, for every dollar collected in premiums, some insurers in California spent $1.13 in claims and expenses. That's a problem. The math just doesn't work. That's not sustainable. It's no wonder that insurers have chosen to non-renew policies or exit the market in California altogether. And this was before the California wildfires. At the same time, poor land management practices, failure to implement basic mitigation strategies, and misguided environmental policies have made natural disasters even more destructive. We must be honest about the multiple factors driving the rise in catastrophic losses, from local mitigation policy failures to market distortions created by counterproductive regulations. That's why I've reintroduced the Repeatedly Flooded Communities Preparations Act along with Senator Schatz. This bill encourages local, state, and federal cooperation to establish and implement mitigation strategies and plans. Mitigation saves lives, it preserves property, and ultimately leads to more stable markets and healthier communities. I believe that a serious and thoughtful approach to mitigation, combined with insurance market reforms that allow carriers to tie real risks to rates, can help ensure that coverage remains available and affordable for Americans across this remarkable country. So today, I look forward to hearing from our distinguished panel of witnesses about what's working, what's not working, and how we can move forward with practical, effective solutions. Working together, I am confident that we can help strengthen our communities, our markets, and the resilience of our nation. Thank you. Ranking Member Warren.
Thank you, Mr. Chairman, and thank you to our witnesses for being here with us today. And I appreciate your holding this hearing today. I think it's really important. The rising cost of home insurance is serious, and it is a growing problem, and one that we've got to work together on in a bipartisan way. Housing is already too expensive for many Americans, and even if families can afford to buy a home, They then get stuck with whopping insurance bills. Mr. Chairman, I know you've seen this in South Carolina. I've seen it in my home state of Massachusetts. Senator Kennedy, I know, has seen this in Louisiana. Our home insurance rates in Massachusetts went up 16% just last year alone. Insurance costs are rising all over the country. In California, after the devastating wildfires in Los Angeles, in Florida, and all over the Southeast after devastating hurricanes, floods, and other natural disasters. But even in areas not hit by natural disasters, rates are climbing fast. In each of the last 2 years, average home insurance rates across the nation have increased by double digits, 23% overall. This is a devastating burden that can cost thousands of dollars on top of all the other costs of home ownership. High prices are not the only problem. In many communities, property insurance is simply impossible to get at any price. Just 2 months ago, Federal Reserve Board Chair Powell told this committee that soon there will be entire regions of the country where homeowners will not be able to get a mortgage because insurance companies won't provide coverage and lenders won't lend without the security of insurance. Even families with insurance are struggling. We've all heard the horror stories of families that have coverage, but even after they have faithfully paid their premiums for years, when disaster strikes, they must battle with insurance companies that delay and deny claims, rip them off, and leave them on the hook for expensive repairs. The insurance system is breaking all across the country. The implications are huge for family budgets, for real estate markets, and for insurers, banks, and the entire financial system and our economy. I know that members of this committee on both sides of the aisle have begun to share ideas and talk about solutions, and I am happy to be part of those discussions. But unfortunately, Mr. Chairman, President Trump is making property insurance crisis worse and driving up costs for families across the country. Let's start with his chaotic and damaging tariffs. These tariffs will make just about everything needed to rebuild and repair houses more expensive. Aluminum, HVAC systems, appliances, gypsum, and on and on. The National Association of Home Builders estimates that Trump's tariffs will raise the cost of building a new mid-sized home by $10,900. And according to the insurance industry, Trump's tariffs will cost the average homeowner over $100 a year in extra insurance costs. A second problem is that President Trump wants to completely eliminate the Federal Emergency Management Agency, or FEMA, as we all know it. He's getting a head start by denying disaster aid all over this country, leaving families with little or no federal help following disasters in Arkansas, West Virginia, Washington, and North Carolina. Recently, HUD Secretary Turner changed the eligibility requirements for community block development grant disaster relief funds, essentially delaying aid for disaster-stricken communities all across our country. Yesterday, Senator Murray and I called on the HUD Inspector General to investigate this. Additionally, the administration also recently announced it is ending FEMA's Building Resilient Infrastructure and Communities, or BRIC program. This program provides hazard mitigation funding to communities and families across the country to help cover the costs of making their roads and bridges and homes more resilient against natural disasters. My state of Massachusetts was relying on $90 million from the BRIC program to make our communities safer. If President Trump has his way, more of this assistance will disappear. FEMA also administers the National Flood Insurance Program. Indeed, the whole job of FEMA is to help Americans prepare for and respond to disasters. If President Trump succeeds in killing this agency, Americans will be left with an even bigger flood and property insurance burden, with no relief in sight. If we're going to make good on our promise to make housing more affordable, banking community members on the other side of the aisle need to push back forcefully against the costly and dangerous policies peddled by President Trump. I'm ready to work with you to do that and to address the bigger changes that we need to make to keep property insurance costs down and to make housing more readily affordable. Thank you, Mr. Chairman.
Thank you, ma'am. We'll now move to our witnesses. The first witness we'll hear from is Mr. Robert Gordon, Senior Vice President at the American Property Casualty Insurance Association.
Chairman Scott, Ranking Member Warren, and members of the committee, thank you for the opportunity to testify today. I am with the American Property Casualty Insurance Association, the premier property and casualty insurance trade representing over 2/3 of the home, auto, and business insurance industry. I want to start by commending this committee for your bipartisan leadership on insurance issues. We also thank you, Mr. Chairman, for your leadership on the Repeatedly Flooded Communities Act, as well as Senator Britt for her work on the Insurance Data Protection Act. Those are two important bills that we support. Property casualty insurance markets in the United States have faced significant stresses over the last several years. They are starting now to restabilize. In 2022, insurance capital contracted by over $73 billion, and AM Best downgraded from stable to negative the profitability outlook for the entire personal auto and property insurance sector for the first time ever. In 2023, insurers' 10-year cumulative underwriting losses peaked at $59 billion. In 2024, personal auto insurance was upgraded back to stable, but business liability insurance and homeowners insurance still have a negative profitability outlook. Homeowners insurers in 2023, according to the NEIC, their most recent profitability study, paid out $1.11 in claims and expenses for every dollar collected. Homeowners insurance rates increased because homeowners' losses increased even more. The primary cost factors were record inflation, even higher inflation for building materials, and more expensive buildings being built in disaster-prone areas. Natural catastrophe losses roughly doubled over the last decade, but the cost to replace all the properties in the United States more than doubled. And then you add to that climate change, legal system abuse, regulatory costs. Together, those have all escalated more than either the CPI or homeowners insurance rates. While homeowners insurance underwriting overall has been unprofitable, there are enormous differences among the states. California is facing the worst property insurance crisis. A majority of the new homes in California are being built in areas with significant wildfire risk, and they are having challenges obtaining insurance. That's largely because California requires prior rate approval. It's the only state that takes roughly a year to approve insurance rate increases. It has some of the highest, worst legal costs in the nation. And according to the NEIC, over the last decade, homeowners insurers in California had a 15% net underwriting loss and a negative return on net worth. And as the chairman said, that math just doesn't work. California's insurance commissioner warned in 2023 that insurance companies will not write insurance, especially in high-risk areas, unless they're able to ensure they have the capital and reserves to fully meet all the claims submitted by consumers, cover their expenses, and earn a fair return. And unfortunately, that has not yet manifested. In fact, both the insurance commissioner and the governor, they have been working very hard on regulatory reforms, but it should not be a surprise that a majority of the top homeowners insurers have pulled back from that market until those reforms materialize. To fill coverage gaps, California has expanded their residual market, the FAIR Plan. That's nearly tripled in size since the end of the 2019 wildfire season. And insurers and agents have warned that that residual market FAIR Plan is a ticking time bomb, and that time bomb exploded this January. The 2025 California wildfires resulted in enormous devastation. They could exceed a record $40 billion in insured losses, and the FAIR Plan residual market's losses exceeded its available capital, and it's already assessed the private insurers $1 billion for support, with more potentially to come. And despite its quasi-insolvency, the FAIR Plan is actually now being expanded for high-end commercial property, and unfortunately that's going to further mask environmental risk signals and subsidize overbuilding. APCIA is working with California leaders on regulatory solutions, including suggestions to depopulate the FAIR Plan, allow insurers to charge timely and actuarial-based rates based on objective standards. We're also emphasizing the need in California and nationwide for more mitigation, resiliency, and infrastructure, and those are hopefully bipartisan goals. We are supporting state and federal adoption of funding for IBHS safety standards, including wildfire prepared standards and fortified building standards. Those help save lives and reduce disaster costs. We do also rely on the federal government's NOAA and NASA weather satellites. Those provide data that insurers and communities use to predict and prepare for storms. FEMA plays an essential role in disaster mitigation, preventing losses before they occur. And the USDA supports community resilience and forest management that are very important. And those programs are essential for effective mitigation and cannot be easily replicated by the states or private industry. Thank you, Mr. Chairman, Ranking Member, and welcome your questions.
Thank you very much for your testimony. Mr. Alex Epstein will be next, the president and founder of the Center for Industrial Progress.
All right. Thank you for having me. I want to talk today about why we need a free market in disaster insurance, and I'm going to focus on the case of the California wildfires. So January's devastating LA wildfires were the biggest wake-up call yet in California. I'm a Californian, that we got that Californians are significantly more endangered by out-of-control wildfires. Now, fortunately, what I saw differently in this case is Californians are starting to understand the root cause here, which is actually a failure to practice climate resilience. As a longtime resident of Southern California, I've long been frustrated that our leading politicians blame our fire problems on rising CO2 levels, which is a factor, but a minor factor they have relatively no ability to affect near term, while ignoring the major factor that they can directly affect, which is resilience. So if you look at the last 100 years of data, we see that increasing resilience can more than offset any new dangers from rising CO2 levels. So for example, the death rate from climate-related disasters has fallen 98% over the last century, and damages adjusted for GDP growth have not increased. Feel free to ask about the NOAA billion-dollar disasters thing, which violates scientific integrity and is inaccurate. So regardless of climate changes, which again we have very little near-term control over, we can radically reduce wildfire danger through 5 forms of resilience, but California has done none of these. So one is we can crack down on human ignition. Many wildfires, and almost all in Southern California, begin with ignition from arson, accidents, especially from the homeless, and power line failures. At least the first 2 are easy to crack down on, and yet we've failed spectacularly to do so. Number 2 is we can reduce fuel load. So whether you're talking about dense forest or the chaparral vegetation in the LA area, reducing the amount of flammable material, whether it's prescribed burns, brush clearing, fire breaks, logging, that can dramatically limit fire's potential. And yet in California, we've let the fuel load grow and grow. Number 3 is we've failed to reduce the proximity of homes to fuel. So once a fire starts to spread, a huge factor in how destructive it is how much human infrastructure is near flammable areas, yet we build more and more near flammable areas or inflammable areas. Number 4 is fire resistance, increasing fire resistance. So once a fire reaches urban areas, a major factor is how fire resistant the affected human infrastructure is, yet we have, in many areas, not significantly increased fire resistance to handle the danger caused by our other bad policies. And then finally, the 5th thing we can do that we're not doing properly is build robust response capabilities. So the last line of defense against a fire is effective firefighting that can respond quickly and at a large scale. Yet before the recent fires, the LA Fire Department had a stagnant budget and insufficient water infrastructure. So why is California so bad at wildfire resilience? One reason is actually related to what Senator Warren brought up with the housing is green policies. So green policies are against human impact. They're against building in general. And in the case of forests, they impede us from managing our naturally fire-prone forests, which need to make a lot of impact, like reducing fuel load. And we're just refusing to do that for green dogma reasons. But the thing most relevant to today's hearing is a lack of free market fire insurance. Because in a free market, fire insurance premiums would have risen dramatically in response to, in California, our failure to practice wildfire resilience. And that is really important. It sends a crucial message. But we shot the messenger in California. Now, many Californians have experienced a situation my wife and I did in early last year, when in preparation for the birth of our first child, we bought our first home in Southern California. And no private company would sell us fire insurance at any price. We could only get the so-called FAIR plan. Now, climate catastrophists will say, oh, it's because there's so much climate risk, nobody can insure it. But this is absurd. Insurers routinely insure for far riskier things relative to the principle at stake. So, for example, it's at the extreme, it might be 1%. Ours is far less than 1%, but other forms of insurance often exceed 5%. So athlete disability insurance, high-risk occupational insurance, even AppleCare often exceeds 5%. So people insure things with much higher risks than wildfires. But the problem is California is not letting the market function because as we failed to practice resilience, we needed insurers to raise prices, to send signals that we needed to take these resilience measures. But again, we shot the messenger. We have something called the Insurance Rate Reduction and Reform Act, Proposition 103 from 1988, that requires insurance companies to raise prior approval. We've heard some other failures of the California insurance market. Basically, it's very simple. You just need to allow total freedom of insurance markets to act in response to risk, and that sends a message to people who are doing irresponsible things, whether at the state level, local level, individual level, and if you do that, you can have a robust response. So I've been trying to convince my government in California that they need to radically reduce wildfire risk through resilience and through proper free market insurance. But whether they listen or not, I hope that the Senate can learn from California's failures. Thank you.
Thank you. Next, we'll hear from Mr. Michael Newman, General Counsel for the Insurance Institute for Business and Home Safety.
Chair Scott, Ranking Member Warren, members of the committee, thank you for the opportunity to speak with you today. I'm the General Counsel of the Insurance Institute for Business and Home Safety. Enabled by the investment of the property insurance industry, we are a building science research institute that studies how to make homes, businesses, and our communities safer from severe weather. Now, in today's hearing, you've already heard the words mitigation, resilience, catastrophes used quite a bit. I'm probably going to use them myself. But I think we would all do better to use more relatable words that the average American homeowner can understand. Words like survivable and insurable. Now, survivable means homes and communities that can withstand the severe weather we know that they will face so that families can get on with their lives. Insurable means simply properties that carriers want to insure. And I'm not talking about a guarantee here, but rather what makes a home a more attractive risk. Whatever words we decide to use, our primary goal should be to make American homes and communities more survivable and insurable. Well, today, that goal and IBHS's work are more urgent than ever. Recent years have seen a marked increase in the frequency, severity, and impact of severe weather. The Los Angeles County fires were a grim reminder of what can occur when wind, fire, and our neighborhoods come together without the right mitigation actions in place. Decades of research in the lab and the field have taught us how to build and retrofit our homes and communities to better withstand these catastrophes. IBHS programs like Fortified and Wildfire Prepared enhance the survivability and insurability of homes to storms and wildfires. And yet far more action and investment by individuals, by the public sector, by the private sector are necessary to make progress at the scale this moment demands. Change is possible. Today I want to share two stories with you that demonstrate the possibilities for progress. In California, a key sign of progress comes from the private sector. Last month, IBHS and KB Home celebrated the opening of Dixon Trail. It's a new community outside of San Diego. Each of the 64 homes in this neighborhood will be built to our Wildfire Prepared Home Plus standard, coupled with attention to separation between structures and the elimination of connective fuels throughout the neighborhood. The community will act as a passive fire break rather than as a dense fuel source. This protects everyone. These actions required almost cost-neutral choices in building materials. For KB Homes, the homes are easier to insure and therefore easier to sell. Congress can follow the lead of KB Home by applying the following maxim: where we build should dictate how we build. All federal investments in new construction should require that those buildings be able to withstand the severe weather we know they will face. When this happens, housing policy is disaster mitigation policy. Housing investments are disaster mitigation investments. Now, across the country from California, the Strengthen Alabama Homes program provides homeowners with $10,000 grants to put fortified roofs on homes. This funding comes solely from state government. Combined with strong building codes in the coastal counties, insurance incentives, and engagement with roofers and builders, the grant program advances survivability and insurability through retrofits. Louisiana is following a similar playbook. In Alabama, 83% of the more than 50,000 designated homes in the state use no government funding. State funds are catalyzing change. Roofers. I did, thank you. Congress can advance these efforts by reducing the tax burden of state mitigation grants through the bipartisan Disaster Mitigation and Tax Parity Act of 2025. It's introduced by Senator Tillis and co-sponsored by many on this committee. We know how to make homes and communities more survivable and insurable. Translating this knowledge into action requires policies that drive consumer behavior, incentivize resilient retrofits, and catalyze the innovation and might of the private sector. It may not always be easy, but as my wife likes to remind me, we can do hard things. We appreciate the opportunity to share some of our ideas with you today, and I look forward to your questions.
Thank you very much, sir. Lastly, we will hear from the Honorable Jessica Pyska, Supervisor for County of Lake in California. Thank you, ma'am.
Thank you, Chairman Scott and Ranking Member Warren and members of the committee, and for the opportunity to testify today.
Hold on one second. Try that. Oh,
Maybe,
why don't you switch microphones?
why don't you switch mics?
Just the mic. Or chairs. Yes. If you could only teach us to do that in a bipartisan fashion as well. So that's great news. Thank you.
It's an honor to be here today speaking on behalf of my constituents and sharing the stories of rural California and our experience with wildfire, the growing insurance crisis, and how we are working to resiliently face a changing climate. I also chair the Agriculture, Environment, and Natural Resources Policy Committee for the California State Association of Counties, CSAC, served on CSAC's Insurance Working Group, and I'm on the National Association of Counties Intergovernmental Disaster Reform Task Force, working with leaders across the country toward federal policy solutions that strengthen local resilience. In summer 2015, Lake County experienced 3 catastrophic wildfires. The Valley Fire burned 76,000 acres, nearly 2,000 structures, and claimed 4 lives. I lost my home and most of my community that day. At the time, Valley was the 3rd most destructive fire in California's history. It marked the beginning of the megafire era and that now defines the West. 70% of Lake County has since burned, and we've lost 5.5% of our housing stock. Through the 20 climate-related declared disasters, we've forged partnerships across local governments, states, federal agencies, tribal nations, and nonprofits to proactively protect our communities. Federal mitigation programs, including FEMA grants, HUD's CDBG program, USDA's Wildfire Defense Grant Program, and the NRCS's Environmental Quality Incentive Program have brought millions of dollars to invest in fire breaks, vegetation management, defensible space, home hardening, safe evacuation routes, watershed restoration, and forest health. We built the capacity to apply for and manage grants and workforce dedicated to advancing community resilience. Lake County is a small, isolated, economically challenged area with a population of 68,000 people, with almost a quarter of the population as seniors and 17% living in poverty. Despite these demographics, we have proudly become a model for disaster mitigation and community preparedness. Yet, despite these investments, we continue to be crushed by the insurance crisis plaguing our nation. Lake County And despite these demographics, we have proudly become a model for disaster mitigation and community preparedness. Lake County has among the highest rates of insurance non-renewals in California. Many residents on the state FAIR plan, the insurer of last resort. Homes built to 2008 standards have a much higher survival rate. However, even homeowners of those new resilient homes are struggling to obtain affordable standard insurance. Hardening homes built before 2008 can mitigate future catastrophic losses. In Lake County, we are piloting a program with the state and FEMA to cluster harden our Kelseyville Riviera community, investing $55,000 in each of 350 total homes. Science-based mitigations and defensible space can lower risk and increase the insurability, not just for the renovated homes, but for the whole community. Other counties can follow this framework, leveraging federal and state grants to harden older housing stock. We also prepare for the hotter, drier, longer fire seasons and wetter, more extreme winters. The National Weather Service's modeling is relied on to pre-position emergency resources year-round. Forest management is a priority, and we've engaged with tribal partners to reintroduce cultural burning to the landscape. Our communities are better prepared than ever, and AmeriCorps teams have helped seniors and vulnerable residents with defensible space projects and disaster preparation. Federal dollars across many programs lower risk and make our communities safer, yet insurance premiums continue to climb to beyond what my constituents can afford. Landlords are leaving the rental market because they cannot absorb skyrocketing insurance costs. Homes sit vacant because buyers cannot obtain insurance. If this trend continues, our property tax base and local economy will suffer. We cannot fix this alone. Robust federal investment in disaster mitigation and community resilience is critical to protect the lives and property and ensure communities like mine have a future. Thank you again for the opportunity to testify today, and I look forward to your questions.
Thank you, Ms. Pyska. Thank you for sharing your testimony, and sorry to hear about your personal devastation as relates to the subject at hand today. So really appreciate you being here and spending some time and unfortunately sharing your pain as it relates to the challenges that so many people around the country face as well. Thank you. Let me just stick with the same topic of affordability and start with Mr. Gordon. Over the last 5 years, the insurance industry has experienced a series of shocks that have frankly constricted profitability. And if you're not profitable, you don't stay. As the dollar in and $1.13 out, that dog won't hunt for very long. So real question is, if you look at the impacts of COVID-19, pandemic, inflation, rising input costs, and legal system abuse, they have all manifested in higher costs for the insurance carriers and frankly, fewer options for the American consumer. Can you provide more context on how those factors have contributed to rising insurance costs and how those costs translate into premiums and frankly, ultimately, translates into not having insurance at all?
Yes. So insurers need capital to provide coverage for people. And what we saw in 2022 is the capital base actually shrank, and it still hasn't recovered in real terms. So the economy keeps growing, but the insurance capital hasn't caught up to that. And the expenses keep rising faster than the insurance premium. So when we break it down, for example, and look at the severe convective storms, things like tornadoes and hail, it's been about an 8% annual increase. Of that, you see a couple percent from general inflation. You see additional building inflation that's been much more costly for the cement and lumber and so forth. Then you have climate change, which has been for severe convective storms adding about 1% a year, and then you add the regulatory costs. So those losses are going up, and in California in particular, we're seeing more and more building in more expensive areas, and the capital isn't there. And insurers are losing money in the California market. The NAIC has talked about the profitability in California. It's been a negative return on net worth. It's been a significant negative underwriting loss, so they just don't have the capital to continue meeting the growing demand. So that's why a majority of the top homeowners insurers in California have had to pull back from that market as they don't have the capital to provide for that increasing demand.
And if the state of California and other states do not allow for the insurance company to find rate sufficiency, you have one or two choices. You keep losing money or lose the state, or leave the state.
That's right. And insurers have a duty to maintain solvency, and they're not going to keep putting in new money into states where they're not able to increase their capital, and they haven't been profitable enough to attract new capital. The NAIC just released a profitability report in the last couple of weeks that said the 10-year return on net worth for insurers is only about 40% of the general business index. So if an investor choosing between insurance or broader commercial sector isn't going to choose insurance, and if insurance isn't able to grow, and again, our surplus has only grown about 5% since 2021, whereas the GDP has grown closer to 20% during that time period, including inflation, it's just not enough to keep up.
Perfect.
If we want to keep insurance affordable, then that goes back to mitigation, because mitigation
Let me
can
stop right
offset.
there and
Yeah.
go to mitigation. Mr. Epstein, let me, obviously, it seems to me that you agree with the fact that the diagnosis of climate change is happening, is actually happening, but you have a different perspective and prescription on how we deal with it as relates to disaster and mitigation. Can you elaborate on your idea of climate adaptation in terms of disaster mitigation and management?
Sure. So first, just thinking of the climate change or climate impact itself, you just need to be even-handed and precise in the sense of you need to be open to both negative and positive impacts, and you need to be precise about the quantity. The other thing you need to be very clear on, since most of the climate impacts are coming from burning fossil fuels, is the energy we get from fossil fuels that we wouldn't otherwise have, because there's nothing as cost-effective and scalable as fossil fuels for most people. That makes us a lot more resilient. So I mentioned that disaster deaths from climate-related causes are way down. Even with all these crazy incentives we have to build in dangerous places, overall climate damages have been flat, declining in some cases. And so what this shows us is the resilience has far outpaced any kind of new challenges. And so as long as we leave markets free, development free, including insurance markets free, we're going to become more and more resilient. So would you rather experience the climate of today or 100 years ago? Obviously today, because the resilience is much greater. We want to keep that trend going.
Great. Thank you. With my last 17 seconds, I want to ask a question because I like to stay under 5 minutes, but I will submit some questions for the record for you, Mr. Newman, appreciating understanding where you see really good models beyond the one that you described earlier and how we can replicate that or bring it to scale around the country. So that would be my question for you. I'll turn now to the ranking member. Thank you.
Thank you, Mr. Chairman. You know, it feels like homeowners just can't catch a break. Someone finally saves up enough money for a down payment to buy a home. On top of their mortgage payment, there's homeowners insurance that on average costs about $200 a month. In some areas, costs are even higher. Texas, for example, the cost has now gone up to about $400 a month. Homeowners who live in an area prone to flooding, like parts of Louisiana, will need separate flood insurance policies, and that, on average, will cost about $700 a month. So homeowners are getting squeezed, and we can't fix our housing crisis without fixing skyrocketing insurance costs. But the Trump administration's attacks on federal disaster mitigation and relief programs and threats to dismantle FEMA will raise insurance costs, not lower them. Trump's plans will make our housing affordability crisis worse. Supervisor Pyska, you lead a town of almost 68,000 people in an area that has been hard hit by floods and wildfires, and I'm very sorry for your personal losses here, as well as the losses of your community. But can you explain to this committee how Trump's moves to slash federal disaster relief funding and eliminate mitigation assistance programs has affected your community and other small towns across this country?
Thank you for the question, Senator. So to consider resiliency for a community, we have to be holistic and look at the systems around that incorporate everything. So I mentioned all of these grant programs that we've been applying for and managing and implementing. And we have $14 million that was awarded under CWDG that was awarded last fall that is currently frozen. And those are mitigation programs that are identified in our community wildfire preparedness plan that we cannot move forward with right now. So we've lost really valuable time preparing for this fire season.
So the money has been already granted, it's been approved, but now it's frozen, and as you say, you not only lose access to the money, you lose time.
Correct.
That you need to engage in this mitigation. Trump's threats are real. Just last week, FEMA's acting administrator wrote a memo outlining the steps the president can take to significantly reduce the number of emergency declarations that a president approves, and thus the amount of federal assistance sent to cities and states hit hard by natural disasters. For example, deciding that extreme snowstorms can never be a disaster, or raising the amount of damage that states must suffer to even qualify for federal disaster aid, will ultimately reduce federal help available just when communities need it most. The Trump administration is breaking the federal government's commitment to help families rebuild after a disaster and the commitment to help make their homes more resilient in preparing for the next one. And this will ultimately raise homeowners' insurance costs. So Supervisor Pyska, what actions can federal policymakers take to make housing and property insurance both more affordable and more accessible for families?
So in California, there are about 5 million homes that are built in high fire threat areas, but as my colleague told me this morning, the new fire mapping in certain areas does not even include Altadena, which just burned. So it's likely more than that. So those are 5 million homes that were built before 2008 that will not be survivable during these weather events and fires. So we need this continued investment from the federal government so that we can spend that $1 ahead of time that we know saves $7 down the road.
Thank you very much. Let me ask you one more question, Supervisor Pyska. What will happen to communities like yours if the federal government doesn't step up and use tools to support communities that have been struck by disaster and to help lower insurance costs and ultimately housing costs for families?
So the federal thresholds are already too difficult for counties like mine to meet. So I mentioned that we've had 20 declared disasters in the last 10 years, and only a fraction of those were federally declared because we're not able to meet those thresholds. So if thresholds continue to change, we will be left out of those recovery programs.
Well, I appreciate very much your demonstrating why Congress needs to act, and I look forward to working with the chairman and all the members of this committee to help fix insurance and housing crisis in this country. Thank you, Mr. Chairman.
Thank you, Ranking Member. We'll go to Senator Kennedy from Louisiana.
Thank you, Mr. Chairman. I apologize to each of you for missing your opening statements, but I was in another committee. I have 5 minutes, and I would like each of you to give me 30 seconds on why you think premiums have risen, and another 30 seconds each on what you think we should do about it. Mr. Gordon?
So the primary cost factors for rising homeowners insurance costs, it's primarily the demographic shifts of people moving into more climate riskier areas and building more expensive homes. 40-year record inflation is the next biggest component. And then the building material inflation has outpaced the underlying inflation. And then you add into that climate change and legal system abuse and regulatory costs. And that's why the natural disaster costs in homeowners insurance are going up. The best way to offset that is through more mitigation.
I'm sorry, it's through what?
More mitigation and resiliency, improved building codes, wildfire prepared standards, fortified building standards. When you look at, if you analyze Hurricane Ian, which was the second worst insured loss event in history, if that had hit Florida before all of Florida's building code reforms, it would have been closer to a Hurricane Katrina loss event. And so you see entire neighborhoods in Florida.
Excuse me for interrupting, but I want to make sure everybody has a chance. Mr. Epstein?
Sure. So, yeah, the basic failures that are causing premiums to rise. So the government has failed at climate resilience, which is the most important thing. So in the case where it's the government-controlled things like the forests in California, they've just totally failed to manage those properly. Sometimes they inhibit people from managing their own property. So that's part one, is failing at resilience. Part two is actively encouraging people to take on risk that they wouldn't take in a free market, which happens, encouraging people, like all these disaster relief things just end up subsidizing people taking more risk, and they create these cascading problems. So the solutions are simple. We want to get rid of all the green policies that inhibit resilience, and we want a totally free market in insurance so that people aren't encouraged to take on undue risk.
Thank you. Madam Supervisor?
So the changing climate has led to catastrophic disasters in my county and across California, as you know. What can be done is a continued investment in infrastructure, hardening homes and community, forest health, and fuel management programs.
Mr. Newman?
Thank you, Senator. I agree with Mr. Gordon on all of his reasons why property insurance price is increasing. Of those, risk is the only one a homeowner has any control over. And so disaster mitigation has to be part of the solution to drive down insurance costs. But not just any disaster mitigation, our risk reduction needs to be grounded in science and verified. It's those two features that provide the bridge from the actions of a homeowner to the insurance industries. What I can tell you is that when you do that, insurers will pay attention.
All right, let's go in.
Oh, that is awesome.
Let's go in reverse order. I think each of you mentioned mitigation. When I hear mitigation, I also hear money. Who do you think should pay for the mitigation, and how should we pay for it? Mr. Newman?
Senator, we all have an obligation to pay for mitigation. That falls on individuals, on homeowners and families. That falls on every level of government, and the private sector needs to pitch in as well.
Madam Supervisor?
I agree. This is all of our responsibility at the local level, all the way up to the federal level, because we know who has to come in and clean up after a catastrophic
So you
event.
think local should contribute?
I think everyone has a part to play.
You think local should contribute?
I think, yes,
Okay.
there is a part to play locally.
Mr. Epstein?
I mean, in general, as much as possible, the people taking on the risk, so as individual as possible. And if the government does something very specifically disastrous, then maybe it owes damages, but yeah, you want risk to be as individual as possible.
Mr. Gordon?
So the single most cost-effective wildfire safety standard is just simply moving the dry brush and plants 5 feet away from your home to create a defensible perimeter. California actually required that in law, but never implemented that in regulation. So there are very cost-effective things that you can do, homeowners can do, communities can do, if we guide them in the right direction.
Thank you, Mr. Chairman.
On behalf of the chairman, Senator Tillis. I have to start, Mr. Epstein. That's a first for me. Thank you so much.
So I was actually researching I was looking into what had happened with the tariffs, and it brought up that crazy language, because I do agree with Senator Warren on one thing. I think the tariffs are making this problem much worse.
If it's any consolation, I was in the middle of a serious meeting when I was abroad last week, and for some reason a theme song from Wicked came up on my phone, and it was very embarrassing because I didn't even know it was until somebody told me what it was. But anyway, back to the matter at hand. From North Carolina, we get hurricanes now in the east and the west. We had the Helene impact, was near Category 1 hurricane that has killed 106 people, 151,000 homes damaged, 500,000 small businesses in disaster-declared counties, 5,000 miles of roads, including a 20-mile segment of I-40, which is still not up and running. We know storms. I heard you all talking about mitigation. We talk about that for the last 10 years that I've been here and for the 8 years that I was in the legislature. We always talk about it and just around a storm, and then we forget about it and do nothing. The president was roundly criticized for saying that there should be conditions attached to FEMA aid. I disagree, incidentally, with the president if he meant individual assistance. You got to give people food, shelter. There can't be conditions for that. You move it out the door. They shouldn't suffer the consequences of bad policy decisions. However, Mr. Gordon made a great point. I am perfectly satisfied with the notion of having conditions attached to any resiliency and recovery to states and local jurisdictions that fail to make their communities and their land more resilient and more able to respond. So I think that it would be great. I've mentioned, I did not know specifically, Mr. Gordon, what you said. I think it's perfectly fine to say that we come up with some sort of way to index state and local governments based on the extent to which they've really implemented best practices for forestry management, for tributary clearing within environmental norms, whatever a best practice looks like. Depoliticize it. And if you're in a jurisdiction that hasn't not only passed the law, but implemented the rules, and we're in a world of scarce resources, then the state and local governments that actually are listening and executing and implementing all of these words that we talk about every time a storm comes through, I think they should get first right. We're in a world of scarce resources. I believe that there should be a point where if a state or local government no longer has demonstrated law, procedures, and money to prepare for resiliency and mitigation, they shouldn't get a dime of federal dollars. Give it to the jurisdictions that do. What's wrong with that concept, Mr. Gordon?
Senator, I think you're making an incredibly important point, and there's extremely effective mitigation, cost-effective mitigation that can be done that just isn't happening out there, and certainly it's a burden on the federal taxpayers to keep providing post-disaster funds for things that could have been mitigated. But it really is a bipartisan issue. We can work together to improve that mitigation, and it's so important. The most cost-effective time to do that is either new buildings or rebuilding, and so it's so important to build back better when you have disasters.
Except for the build back better part. I got everything else. But Mr. Newman?
I've got two words for you, Senator: building codes.
Yeah.
It is basic low-hanging fruit. We know that building codes work. The Florida Building Code, we believe, prevented about $1 to $3 billion from additional losses associated with Hurricane Ian in Florida. And to the point that Commissioner Pyska made, Altadena will not be rebuilt using California's wildfire codes unless there is action taken by Los Angeles County. That can't be the case. We need to apply the tools we know work to both new construction and rebuilds.
I absolutely, I know we're talking more about insurance strategies. I'll put some questions for the record. But, folks, we've got to stop talking about resiliency, and then you go home, you get political pushback, you don't do it. People are dying, businesses are being lost. I can take a look at a lot of the communities in North Carolina that were impacted by nearly $50 billion in damage from Helene, and probably attribute some of them for past mistakes and not moving forward on mitigation. And I'll leave you with this. It was it's in one of the small towns where I had a former mayor who was been in the town for a long time, said, these buildings here, I own them all. And I got really mad when the town council made me elevate those two buildings back there that are about 12 foot higher than they were before. Now they're the only ones standing. We need local and state officials to have the courage to tell their communities what they need to do to be more resilient. And the federal government needs to reward those who will and deny funding for those who don't. Thank you.
Perfect. Thank you. Senator Smith.
Thank you, Mr. Chair, and welcome to all of our panelists. I appreciate this hearing this morning. I'd like to start, Mr. Chair, by asking for unanimous consent that a report from the Bipartisan Policy Center, which is about opportunities for federal action to address the rising cost of home insurance, be entered into the record. I think this is a really good contribution to our discussion, and I'd ask unanimous consent that it be included in the record.
Without objection.
So I'm going to focus my questions today on issues of the rising cost of homeowners insurance and how these extreme weather events are affecting that. Homeowners insurance is costing more and more around the country, and it is getting harder to find around the country. And the reason for this is pretty clear. Increasingly common and more extreme weather events, whether it's rain or hail or fire or tornadoes, hurricanes, otherwise known as climate change. So, colleagues, I have some maps here to show what's happening, and I want to just do a big thank you to Senator Whitehouse and the Budget Committee staff who've helped to put these maps together. This is an issue in Minnesota. You might not think Minnesota is not like North Carolina, maybe wouldn't have the same challenges, but take a look at this. This map shows that in Minnesota, working families are struggling to manage a 39% average increase in home insurance rates, which we've seen over the last 7 years. And in some regions of my state, the costs have gone up even more. For example, Yellow Medicine County, which is a rural county in western Minnesota, saw premium increases of over 400% over 7 years. You can see that here. And folks in some Minnesota counties are struggling to find insurance at all, and we're seeing big increases in the rates of non-renewals of insurance policies in 18 counties across my state. And all but one of these 18 counties have had a federal disaster declaration for flooding or severe storms during this same period. So this is a huge deal, of course, and it's not, of course, just a Minnesota problem. The rates of non-renewals of insurance policies has dramatically increased around the country, and especially in states represented by members of this committee. In 2023, all of these states were in the top 20 worst states for home insurance non-renewals. Louisiana, number 2, North Carolina, number 3, Massachusetts, number 5, Rhode Island, South Carolina, South Dakota, I could go on. This is a significant problem. And I want us just to understand that these insurance disruptions pose a systemic risk to the financial sector and to the housing market and to our state budgets. And Commissioner Pyska, I'm going to come to you in just a minute about this. This is a quote from Jay Powell in February when he came before this committee. I asked a question about this, and he answered in part that because banks and insurance companies are pulling out of high-risk areas, he said, quote, if you fast forward 10 or 15 years, there are going to be regions where you can't get a mortgage, end quote. And of course, if this happens, this will be not just a regional or local issue, it'll be a national issue. So my question, I want to come to you, Supervisor Pyska. Given your experience in California, do you think that local or state governments have the capacity, are they positioned to deal with this kind of massive systemic impact if we see a loss of home insurance for families?
No, not at all. And that will impact our local budgets. We get most of our revenue from property tax. And we are starting to see homes sit on the market for an extended period of time. They cannot be sold because escrow, you can't get insurance in escrow. Landlords are pulling out. My sister just lost her rental because the landlord could no longer pass through the cost of the insurance to her. So it is going to affect all of our communities. We are already seeing a high number of vacant homes in some of my HOAs in the higher fire threat areas, even though we are doing all of this mitigation work at the local level with fire breaks, with hardening homes. We are doing as much as we can right now. And everything is on the line.
We can't just sort of say, oh, the states will cover this, because it's a systemic financial risk. And I mean, just in a couple seconds that I have left, you've got to consider what this means in terms of your municipal bond ratings as well. Is that not true?
Absolutely.
Right. I wanted to just take this opportunity to raise this issue because I think that it is something, I know all of us on this committee are thinking a lot about what we can do around mitigation, and I have a question for the record which I will submit on this, but I think the systemic risk that we see because of this challenge with home insurance is something that is a big, big problem. Thank you, Mr. Chair.
Thank you, Senator Smith. I feel the need whenever we have a discussion like this to touch on the fact that we have an insurance, when we have an insurance-related discussion within this committee, I believe the U.S. system of state-based insurance regulation actually is the gold standard when it comes to protecting our insurance markets and insurance consumers in South Dakota and across the country. But I want to explore it a little bit. Mr. Gordon, do you believe that our state-based regulatory system has been effective and successful?
Yes, it's been very successful, very dynamic, and state regulators. There's always some exceptions, but overall they're doing an excellent job, and we work closely with them.
When we talk about a state-based system, we're talking about one in which you have both the ability to set rates, determine risk, and also to make sure that those risks are fairly responded to. Fair?
That is fair. And in fact, what's interesting is there's been a lot of talk about how some of these state residual markets have been growing because of non-renewals. But for every state residual market that has expanded, there's a residual market in a neighboring state that's better regulated where with similar climate risk that's contracting. So it's really about state regulation. Insurers have been insuring the weather for hundreds of years, will continue to do so. It's the government risk that can make it challenging, particularly if you're not able to get adequate rate.
One area that we do have a responsibility for here within this committee is the National Flood Insurance Program. It's been 12 years, and once again, this is how good Congress is at this. It's over 12 years since the last time the long-term reauthorization of the National Flood Insurance Program was completed. This has caused significant uncertainty for homeowners across the nation, and for this reason, Senator Kennedy and I are working together to introduce legislation that reauthorizes the program and makes common sense reforms that promote solvency, transparency, affordability, mitigation, and consumer protection. Private insurers do play a critical role in the NFIP. Beyond administration of the program, private insurers also handle claims processing and risk assessment, applying actuarial expertise and data analysis to improve flood risk pricing. My question, first of all, to Mr. Gordon, NFIP has been experiencing a decline in direct premiums written. Mr. Gordon, what ideas do your members have for increasing premium dollars into the NFIP while maintaining private market participation and perhaps bringing back the preferred risk policies that were phased out several years ago may very well be something that we should consider?
Yes, Senator, you're absolutely right. Flood is the most common risk. 4.7 million American homeowners rely on the NFIP, but that's unfortunately only about 4% of homeowners. Critical solution, and this should be bipartisan, is more education. We need to help homeowners understand, even if you're not in a flood zone, flood insurance is so important. Citizens of Asheville found that recently. We have to do a better job helping them understand how important it is. And as you say, the NFIP has had, I think, 33 consecutive short-term reauthorizations. We need some certainty, we need reform, we need a long-term reauthorization, and we want to work with you to achieve that.
Thank you. Mr. Newman, what mitigation tactics have you found to be the most successful, and how can we as policymakers help guarantee that mitigation investments lead to tangible reductions in policyholders' premiums and that families and businesses clearly see and understand those savings are available to them?
Thank you, Senator. I'll take two perils quickly. One is wildfire. Our wildfire prepared program brings together a set of mitigation actions that collectively reduce risk of insurance. In the wind and hail side, we have our fortified program. It is a better way to install roofs and have new construction of homes to better withstand hurricanes, high winds, and hail. In both of those instances, we're combining science-based mitigation actions with verification. That's what provides a bridge to the property insurance industry, and that's what insurers are looking for. In terms of what Congress can do and other policymakers, we need to find ways to make it easier for people to afford these mitigation actions. They're not expensive. Our mitigation actions are affordable, achievable, and effective, but many homeowners don't have the requisite money. So how do we make it easier through commercial lending, through government programs, through grants, through tax incentives, through catastrophe savings accounts? All of these things can help cover the cost of making our homes and communities more survivable and insurable.
Thank you, sir. My time is expiring. On behalf of the chairman, Senator Van Hollen is recognized.
Thank you, Senator, and thank all of you for your testimony here this morning. You know, it's bad enough that the Trump administration essentially denies the fact of climate change and doesn't want to do anything about it, doesn't want to take any actions to reduce the emissions, greenhouse gas emissions that help fuel climate change. But on top of that, they want to eliminate many of the important federal investments that we use to try to protect communities from the impact of climate change. So they don't want to put out the fire or help reduce the fire. They also want to get rid of the fire breaks. And I'm referring specifically to their proposals to cut back FEMA programs and specifically their termination of the BRIC program. And so I'd like to begin with you, Ms. Pyska, and I heard your testimony on C-SPAN, and thank you for sharing with us the terrible experience that you had. But I know now you're committed to trying to protect others and communities. Can you describe briefly what the impact of getting rid of the BRIC program would be on our efforts to mitigate the impact of climate change and natural disasters generally?
Thank you, Senator, for that question. Lake County, we have not been able to apply for BRIC because it's too difficult for a county our size, and we cannot afford the match. We've been working towards getting BRIC ready for the last several years. So this is a devastating loss to the plans that we have put in motion. But my two neighboring counties, the Sonoma County and Napa County, which are much more affluent, but also have suffered from multiple fires that have continued to cross our borders between our counties, they each have applied for and been awarded BRIC grants, and they only got through planning. And now that we're about to start implementing these programs that would bring resiliency into their community, hardening homes, educating the community, fuel management programs, all of that is now gone. So while the planning was helpful, they're dead in the water now, and they cannot move forward with those really critical programs.
Well, thank you for sharing that story. We have a similar situation in the state of Maryland. And, you know, Maryland had about $91 million in federal funding for 51 targeted projects in the state of Maryland. In the case of Crisfield, Maryland, which is on the bay and has been very prone to rising sea levels and additional storm surges, they had done the preliminary work and then, you know, received a substantial federal BRIC grant to help them, and of course that was terminated altogether. So they're kind of left in the lurch because it's a small community. They're certainly not to blame for the rising waters around them, and yet here we have the Trump administration abandoning a program designed to help communities like theirs. Mr. Newman, I know that you testified just a few years ago in support of the BRIC program in front of the House Transportation and Infrastructure Committee, hearing there entitled "The Benefits of Investing in Resilience and Mitigation." You pointed to the BRIC program specifically as an important way to help these communities. Can you also talk briefly about the impact of cutting that program to communities?
Yeah, absolutely. I didn't have the good fortune to testify at that time, but I'm sure my organization did. BRIC was a good idea during the Trump administration the first time through when it was enacted, and it remains a good idea now. Now, it's not a perfect program. The fact that Lake County has not been able to access funds from the BRIC program suggests that it can be improved. But when the U.S. Chamber of Commerce and Allstate Insurance Company put out a report that says every dollar invested in disaster preparedness and mitigation has a $13 in reduced losses and economic savings, we know that pre-disaster mitigation is the best time to invest in risk reduction. BRIC did that. We need more of that, not less.
Thank you. And you're right, I stand corrected. It was another representative from your good organization. Thank you. Thank you, Senator. Mr. Chairman.
Thank you, sir. Senator Ricketts.
Thank you, Mr. Chairman, and thank you to our witnesses for being here today. 4 years of the Biden administration, we saw reckless spending, trillions of dollars on partisan programs that drove up inflation. Average family in America had to pay $13,000 more to have the same standard of living after Biden as they did before Biden. And so, Mr. Gordon, I think you reflected that in your testimony, that inflation was the primary driver of that. We've seen in Nebraska, when we're talking about these homeowner insurance rates, that the average home insurance premium has gone, is as high as now at up to $5,121 for a home valued at $300,000. The average home insurance annual premium rate in the U.S. last year was $51. So that's a difference of $2,970 that Nebraska pays higher in insurance premiums than the average in the rest of the country. That's a 1-2 punch for homeowners who have just experienced 4 years of high inflation, where we've seen all these costs for everything from groceries to gasoline go up, and then they have to pay that as well. Now, one of the things that we have in Nebraska is we do have weather. We've had since I was a kid. We had in 1975, we had a tornado that came through Omaha. We had another tornado came through last year, so about once every 50 years or so, we've experienced that in Omaha. But in Fremont, actually, 4 out of the last 5 years, they've had hail. Just recently, they had 4-inch hail. Now, unless we're talking about microclimate change, Fremont's a community, it's 45 minutes from Omaha, yet that hail didn't really impact any of their communities. It was just bad luck that Fremont got hit with that. So I think it's hard to say that climate change is going to be the primary driver of that. But Mr. Gordon, I wonder if you could comment on, do you have some thoughts on specifically Nebraska, why we've seen these homeowner insurance rates go up? Have you got any specific data with regard to Nebraska?
So we do have specific data on Nebraska. The NAIC just released, and we'll provide that to your office. I will just say Nebraska is a great place to live, and one of the trends—
I love living there. We got the best place in the world. I agree.
One of the trends we've seen accelerating after the pandemic is people moving to states and building nicer, more expensive homes. And then you add 40-year record inflation, and then you add on top of that even higher inflation in the building materials and supplies. And then you add a little bit from climate change and legal system abuse and so forth, and we've gotten about an 8% annual increase in the cost from severe convective storms like hail and tornadoes that are hitting Nebraska.
So the weather accounts for about 8% of that overall? Is that what you're saying?
So the increasing losses are about 8%.
Oh,
the climate change is only about 1% of that 8%. The rest is the 40-year record inflation and even higher inflation in the building materials and supplies.
Yeah. Mr. Epstein, do you have any data specifically about Nebraska and why we're seeing these big insurance premium costs?
Well, I think the most important data that hasn't been covered yet is just this, because we've heard repeatedly this claim that, it's climate change, extreme weather that's driving all these local insurance premium increases. But if you look at, we have macro data for measuring this kind of thing, things like accumulated cyclone and energy, hurricane frequency, hurricane intensity. And what we see is we don't see any significant changes in there. We do see some warming, but we're not seeing any significant changes. The hypothetical changes are in the future. We also see, adjusted for GDP, globally damages are not going up. So if we have an insurance premium thing, it's not going to be driven by climate. It's driven by other things, including lack of resilience and or subsidizing people to take on way too much risk. And it's really simple. Just we need to stop, through all these disaster relief things, we need to stop subsidizing people for taking risks and make others do it. That's just leading to all these cascading problems, and there's no way around that.
So, Mr. Epstein, if I understand what you're saying, one of the things you're saying is, hey, if you look over at least as long as we've got data, which is probably like the last 100 years, we've probably got really good data, and you look at the occurrences like things like tornadoes in Nebraska or hurricanes in the Gulf, they aren't occurring any more or less than they were.
Yeah, there's just not statistically significant trends. There's projections about the future of like storms will become 10% more intense and less frequent, which that itself is not very dramatic. It's just you can have mild change that's just not that discernible. It's just not that big a factor, and we have to be real about that. It's real, it's just small, and we don't even know if it's net negative in terms of these extreme weather issues.
And so one of the things that you also comment on, I'm actually running out of time though, is the insurance environment. And I just want to highlight in Nebraska, we actually have a great insurance department. We don't have some of the problems that you described, Mr. Epstein, with California with regard to that. And they really do a wonderful job. In fact, Nebraska is one of the leaders in the insurance marketplace. We have many companies that are domiciled in Nebraska because of our great insurance marketplace and great environment we have in the state. So I just wanted to give a shout out to my home state industry here. Thank you very much, Mr.
Yes, sir.
Chairman.
Thank you. Senator Cortez Masto.
Thank you, Mr. Chairman. I want to thank you for having this important hearing. It's an important topic, and I think we all agree something that needs to be addressed. I want to talk about, I'm from Nevada. Wildfires are longer, hotter. It's happening now, and this is a problem with our insurance costs as well, so I appreciate the conversation today. I also appreciate the conversation about fuel reduction, because that's what needs to happen as part of this mitigation effort. I want to point out to my colleagues, Senator Tim Sheehy and I have a Western Wildfire Support Act that we have introduced. I welcome them to join me. It provides communities across the western United States with additional resources to help prevent wildfires before they start, to combat those that do spark, and help communities touched by a wildfire recover and rebuild. I also just have to point out that the collective work we've done in a bipartisan way in the bipartisan infrastructure package was to deliver about $8 billion for wildfire prevention and suppression. It was important for us for the very reasons that you're all talking about. And I have to say, I'm disappointed because I have just learned and heard reports of terminated employees at agencies like the Bureau of Land Management and U.S. Forest Service who are working to protect the West from these wildfires. I've also learned how Elon Musk and DOGE has cut federal funds for wildfire mitigation. They've issued stop work orders to small businesses and organizations removing fuels from public lands, along with firing thousands of Forest Service and DOI employees. I think we got to get back on track here for the very reasons that you're all talking about. I just came from Nevada. I'm hearing in my state as well about the high cost of insurance. Supervisor Pyska and Mr. Gordon, let me ask you about this. I've also heard from insurance professionals in my state about insurance discrimination against first-time home buyers. Insurers can deny a first-time home buyer a policy simply because they lack prior insurance history, which negatively impacts their insurance score. Is this true, and should insurance policies be based on the risk profile of the house? Isn't that where it should be, rather than if the buyer is a first-time homeowner? And let me start, Supervisor Pyska, with you, and then I'll ask you, Mr. Gordon, as well to answer.
Thank you, Senator. I am not aware of that in my county, but I'm happy to look into it and get back to you.
Thank you. I appreciate that. Mr. Gordon, are you hearing anything like that?
I have not heard about that issue. Certainly both the homeowner and the home are relevant to the risks. Some homeowners do a better job of taking care of their property than others, but I have not heard of that specific problem, but we'd be happy to work with your office to
I appreciate that.
see if there are any issues we can help address.
Thank you. And then let me jump back to Supervisor Pyska. Can you discuss the strategy of insuring homes on a house-by-house basis rather than a zip code to account for owners who have made investments in resiliency? Would this more accurate estimation help expand access to affordable insurance options?
Thank you, Senator. Certainly, hardening house by house is a good approach, but what we're trying to do in my county is cluster harden entire communities with wraparound fire breaks so that that entire community is resilient, so evacuation corridors are safe, so that the community doesn't become more fuel.
Right. And Mr. Gordon, would that make a difference? Would that help lower insurance costs if insurance companies saw this mitigation and what the work is being done in a neighborhood?
Yes, it would. And in particular, I mentioned earlier, one of the most cost-effective fire safety measures is clearing a 5-foot defensible perimeter. The problem is if you do that and your neighbors don't, then you're still vulnerable. So a lot of these fire safety measures, it's really important that the community does it in addition to the individual homeowner.
Thank you. And I have to agree with Senator Rounds. I do think there is a role for us at a federal level, but also at the state level, our state insurance commissioners who, I know in Nevada, I've already been talking with my state insurance commissioner. I do think it is important for us to make sure we're addressing those concerns. I just have to say, thank you for being here. This is the #1 topic I hear at home for so many reasons. In the West, it is the wildfires. Obviously, in other geographic locations, there are different extreme weathers that are having an impact, but we need to address it, and we need to do it in a collaborative effort. So thank you for being here.
Thank you, ma'am. Senator Bernie Moreno.
Well, thank you, Mr. Chairman, for having another great hearing. I appreciate it very much. I agree with Senator Cortez Masto. This is a really important topic, something we do hear about quite a bit. Question I have for all of you, maybe you can go down the line and answer it, because again, this should be very bipartisan. We should all want to lower the costs for consumers. This is certainly not a Republican or Democrat issue, it's an American issue. What is the role of excess litigation in driving the cost of up insurance? We'll start with Mr. Newman.
While I am an attorney, that is not my area of expertise, sir.
Okay.
Senator, it's not my area of expertise either, but we would be happy to get back to you.
Okay. Mr. Epstein?
I mean, this makes everything worse, but if you just want to focus on things, on the whole NEPA issue and how much litigation we have that delays NEPA reviews, make them take forever. So this applies to so much building in the United States, but particularly wildfire prevention type measures where you just have to wait forever to get authorization, to clear things, to log, anything like that. So this is a cancer on the country, and it's certainly destructive with wildfire prevention.
It's a very important, significant component of the increasing costs. I mean, consumers want a legal system that's fair and timely and reasonable, and our system fails on all accounts. You see a small number of people getting rich with these escalating mega verdicts, and that means that all consumers have to pay for that in the form of higher prices. And the tort tax on Americans is currently $4,200 annually on American families. And the United States is an extreme outlier compared to other nations on how much money is drained away from litigation. It's really become a big business for some of the plaintiff lawyers, and that's why we're seeing the enormous increase in the legal advertising. Even the insurance regulators are now coming out saying if parties have a problem with their claim, first try and work it out with your agent and broker, and then you can go to the insurance department and they'll work with you for free without taking 33 to 40% of your compensation, which may mean you wouldn't have enough to pay for your needed Medicare. Florida has had enormous success in reforming their system. At one point, they had about 9% of the homeowners' claims, but about 79% of the homeowners' litigation in the country. Now, with some reforms, they have dramatically reduced the litigation, and we actually saw both the reinsurance and primary insurance rates in real terms actually came down, declined in Florida. Despite all the cost increases you're hearing about, they were able to reduce their insurance rates and make it more affordable for consumers because of that legal reform.
That's fantastic. And near and dear to my heart is my home state, Ohio. Full commercial, Mr. Chairman. Ohio has one of the lowest insurance rates in the country across the entire spectrum.
Could you say that again? I couldn't hear you.
Ohio has a great insurance rates, low cost of living, fantastic quality of life. So if you're watching this, leave your home state, move to Ohio.
I will subtract that from your time and just add to it that Charleston, South Carolina, along with the rest of the state, is fabulous as well.
Yeah, it's too hot. But one of the things that we've done in Ohio is have a lot of competition. So a lot of robust competition in the marketplace. And Mr. Gordon, to start with you, what role does that play? Because what I see in Ohio is dramatically lower auto insurance rates, dramatically lower homeowners insurance rates. That makes a difference to working class Americans, because if you can't afford a home and you can't afford a car, those are the two basic elements of being able to have a thriving life. What are your thoughts there?
Yeah, insurance is one of the most competitive financial sector. There are thousands of insurers competing for your business. You can't turn on the television without seeing insurance ads competing. And states like Ohio that have done a great job regulating, they just aren't seeing the same availability challenge. They still have inflation like other states do. That's a national and global issue, but those markets have performed very well, and that's a credit to the state regulation in Ohio.
Well, I appreciate that. And Mr. Epstein, obviously you and I have talked a lot about the need for more energy resources around the country. We have currently a lot of manic move among some states, 18 states, to eliminate internal combustion engine cars, drive everybody to drive electric vehicles. Have you seen the cost difference between having to repair an electric vehicle that's been in an accident and with how that's driving up insurance rates versus a traditional internal combustion engine automobile?
Yeah, there's something that, I mean, in general, EVs are being forced on people because they're not the most cost-effective option, and that includes the full process of them, including insurance and other kinds of things. So we shouldn't do that. And by the way, the mandate of EVs is an existential threat to the grid, and, you know, power line stuff is related in the sense of, I mean, grid issues can create wildfires themselves. So we should really stop overloading our grid and start adding reliable capacity to the grid.
Thank you. Thank you, Mr. Oh, he left. Mrs. Chairman.
Thank you. Senator Kim.
Yeah, thank you. Mr. Gordon, I'd like to just start with you, just kind of talking through the National Flood Insurance Program. You know, I know there was some discussion about it earlier. You know, we still don't know where this administration is going to be going when it comes to NFIP, and I'm trying to think through the range of actions that, you know, might be considered by this administration. So, Mr. Gordon, I just wanted to ask you, and I know there was some talk about, you know, some role privatization, but, you know, in particular, I was concerned when I saw that Project 2025 called for the privatization and, frankly, elimination of the National Flood Insurance Program. So I wanted to ask you if the NFIP were entirely privatized and eliminated, you know, is the private sector equipped to absorb these costs while keeping insurance premiums lower for consumers?
Short answer is no. Flood is the most common risk, common disaster risks. 4.7 million Americans currently rely on the NFIP for protection. One of the things you have to keep in mind is the NFIP, it pays no taxes and has no cost of capital, but it underprices its coverage. It's currently $22 billion in debt, and that's after $16 billion of debt forgiveness. So the prices that it charges, there's such a great chasm between that and what the private market would have to charge. The private market just wouldn't be able to do it. It would be political outrage. The private market would take a long time to absorb that. And the NFIP also plays an enormously important role in encouraging community floodplain management, developing flood maps, building codes. That's something the private sector could never replace. So it's essential to keep that program working, and we've certainly raised our hand anytime there were hiccups in the Write Your Own program to make sure that American homeowners can continue to benefit from the federal flood insurance program.
Do you have a sense of how much premiums, like how much we would estimate premiums would go up if NFIP was unilaterally privatized or eliminated?
Yeah, it depends a little bit on the homeowner, and certainly the NFIP with Risk Rating 2.0 has been trying to start to close the gap between their underpricing and actuarial rates, but there's still a very significant delta, and prices would have to go up significantly if the private market were to take that on over time, and it would take quite a bit of time for the private market to absorb that risk.
Yeah, you know, when I go around my state, you know, just so many, first of all, communities still trying to recover from Superstorm Sandy from a long while back, trying to understand how they're going to go. And this isn't, you know, just people when it has the second homes and beach homes, like just the communities that are living there in Ocean County, down in Cape May, just, you know, places where there are generations that have grown up there. And they're really worried about this. They really worry. The way that they talk to me about it is they say they worry that their way of life is just going to go away, you know, and that they're not going to be able to keep up with this. So I appreciate that you can really help us understand just, you know, some of the left and right limits of what should be possible here. And I'll be honest with you, I'm worried because, you know, we've seen this administration take very drastic steps very quickly. And I'm really trying to urge, you know, this committee to play a role in trying to make sure that the administration is thoughtful about how we move forward, that we work together to try to come up with that. Because, you know, what I worry about, I'd like your thoughts on this. I mean, I really see this as a situation where, especially some of the poorest, most vulnerable that live in some of these communities, that they're going to just fall through the cracks. You know, that if we're seeing some type of major gutting here, that, you know, they're not going to be able to afford those types of prices. We're going to see just, you know, a real devastation in terms of who is able to be able to live in some of these types of areas. Does that make sense to you?
It does make sense, and in fact, APCIA has supported essentially means testing. If you're going to have a federally subsidized program to support people living in flood zones, at least target that program to the people who need it the most, such as the people you're talking about.
Okay, thank you. I wanted, Ms. Pyska, I wanted to just ask you just real quick here. You know, FEMA removed the requirement for communities to consider climate change and take the needs of vulnerable communities into account during hazard mitigation planning process. I guess I just wanted to ask you, what do you think that's going to do in terms of, you know, in terms of these communities in mitigating funding impacts that the disaster, you know, the effects of these disasters on these communities? What is the role that that's going to do in terms of their ability to better prepare themselves for the dangers that are out there?
Thank you, Senator. So we know that the wildfires are going to continue as the other unprecedented winter storms, atmospheric rivers. If we can't harden our communities and do that mitigation up front, then potentially we lose more of our communities.
Yeah.
That's what's at risk.
No, I appreciate that. And look, I was just talking about Ocean County in New Jersey, very concerned about flooding, but also is continuing to fight wildfires right now as we speak. We have brave firefighters right now, trying to keep people safe. And so just a number of different threats that are not just exclusive to Ocean County or New Jersey, but all over. So thank you for raising that important point, and I'll yield back.
Thank you, Senator. Senator Banks.
Thank you. Mr. Gordon, we've seen reports of criminal gangs like MS-13 paying illegal immigrants to stage fake accidents on work sites before they sue contractors for medical injuries that they didn't actually incur. I've worried that this is driving up the cost of liability insurance and workers' comp insurance and pulling resources away from working class Americans who actually do become injured on the job. It's yet another example of criminal illegal gangs stealing resources from American workers. Can you talk about how is this spike in fraud impacting insurance costs on the ground, if you think that it is?
Absolutely, Senator. Fraud is an enormous challenge in the insurance industry. The Coalition Against Insurance Fraud estimates that fraud against insurers is increasing costs by more than $300 billion annually. That includes staged auto accidents, fraudulent contractors soliciting business from storm victims, medical providers and lawyers generating fraudulent or phantom charges. Insurers are trying to use artificial intelligence to better detect fraud patterns, but we're very worried because some of the surveys show up to 23% of young people say they would commit insurance fraud, and nearly a third do not consider it to be a crime. And it raises prices for everyone, and it's a real problem that we need to tackle.
Talk about illegal immigrants, MS-13, and some of those related fraud incidents?
I'll say we have seen videos involving MS-13 auto fraud where before the accidents you see some of the passengers tensing up even before the accident occurs, which clearly shows it's a staged accident.
And proven that MS-13 has been involved in...
I haven't seen all the evidence. I've seen certainly the reports that indicate they're involved, but not an expert in that area.
Some states have tried to slow rising insurance costs with price caps, but you've warned that price caps can drive insurance companies out of business, reduce competition, and even risk creating local monopolies, which can lead to even higher prices. What are the short and long-term effects of price caps, and what's a better way to keep insurance costs at bay?
Yeah, insurance is an incredibly competitive sector, and so you see states like Illinois that don't have price regulation, and their costs are actually under average. States like California that have prior approval, where the inflation costs have gone up, what you've seen is now a majority of the homeowners insurers, the top insurers, have had to pull back from that marketplace, and that transforms affordability pressures into availability crisis. We saw that in Florida after the Hurricane Andrew in 1992. Most of the national insurers pulled out of the marketplace. They had enormous availability crisis. The market kept going into a downward spiral until they finally enacted a number of reforms, including allowing much more actuarial rates. So price caps are not the way to go. Having a relative free competitive market where you have thousands of insurers vying for consumer business and insurance regulators working on the market conduct to make sure they're fulfilling their promises, that's what makes effective markets.
Thank you. Mr. Epstein, some on the left talk about climate change being the biggest cause of rising insurance cost. And that was one of the justifications that they used for pushing the Green New Deal. Spending $1 trillion on green energy subsidies in the Inflation Reduction Act, for example. Have these policies made energy more abundant and affordable in America?
No, I mean, these have, so energy affects everything, including I've talked earlier about energy makes you more climate resilient. So it's one of the reasons why we're safer than ever from storms and floods, et cetera, because we have a lot of energy to build sturdy infrastructure. And all of these quote unquote green energy programs make energy more scarce and less reliable, because what they do is they restrict the most cost effective source of energy like fossil fuels and nuclear and hydro. And then they artificially force us to use amounts of solar and wind that we wouldn't use on a free market. And the Inflation Reduction Act, since we're talking about reconciliation in the general environment, like that whole thing should be repealed. And that saves $1 to $2 trillion from the budget, but it also stops us from distorting the electricity markets in a way that's causing a crisis. We're defunding reliable electricity, we're overfunding unreliable electricity, and that's why we have shortages around the country at the time when we have a lot of organic new demand from AI data centers. So we need to get the government to stop restricting good energy, stop subsidizing ineffective energy, and that'll be crucial.
Can you tell me, though, is there any meaningful evidence that IRA energy subsidies have actually reduced the risk of natural disasters?
No, I mean, if anything, they increase it because they make us poorer and less resilient.
I yield back.
Thank you. Ms. Pyska, I'm sorry if I got that wrong. I'd like to share a story of you of a senior living in Dewey, Humboldt, Arizona. It's a small town of fewer than 5,000 residents. So in an effort to reduce wildfire risk, she carried out extensive mitigation work, including clearing trees and creating defensible space between shrubs. Despite these proactive measures, her insurance premium jumped from $1,450 to $4,500 a year. She's not alone. Across the state, people are seeing their premiums triple or quadruple if they can find coverage at all. And I have heard from people that they've had their coverage just dropped altogether. So if a homeowner invests in making their property more wildfire resistant, shouldn't their insurance costs reflect that reduced risk? And at the very least, they should be able to access and maintain affordable coverage when they've taken responsible steps to protect their homes. Would you agree with that statement?
Thank you, Senator. And yes, I lost my home in 2015 and then rebuilt it to the most current standards, and it's in a burn scar, so there's not a forest any longer. So the only thing that's the same is the topography. So my home went from, the insurance price annually was about $2,600 4 years ago, and now it's almost $9,000. And this is I have no vents in my roofs, cement siding, on a slab, no wood decks. Everything that I could possibly do, I've done. And I actually lost coverage last summer and had to work with my insurer to bring it back. So and I've done everything possible, as with everyone in my newly rebuilt community.
And Ms. Pyska, insurers are prohibited from using losses from natural disasters in other states, like a wildfire in California, as justification for raising premiums in Arizona. So how do we make sure insurers are truly following that rule? And what oversight is in place to protect homeowners from excessive rate hikes, especially as we have consolidation in the insurance market?
I appreciate that question, but it's not my area of expertise.
Take a guess. I'm just kidding. Don't worry about it.
Thank you.
Mr. Gordon, after major disasters, we often see an influx of fraudulent home repair contractors and scammers pushing what's called an assignment of benefits, or AOB. In these cases, a third party convinces a homeowner to sign over their insurance rights, then inflates the claims, or just disappears with the money, leaving the homeowner without repairs. What are insurance companies doing to verify the legitimacy of AOB agreements and protect consumers from fraudulent actors, which of course also ends up driving premiums for everybody too?
Yes, you're absolutely right, Senator, and insurers have been victims of that kind of assignment of benefit fraud. This is another area where the insurance regulators are mostly doing the right thing, and they're helping to educate consumers. Don't go to these contractors and sign away your rights. It's important to notify your agent, your broker, your company of potential harm, and make sure that you have a valid licensed contractor working on it. A number of states have passed assignment of benefit reform. Florida did. It was enormously effective in reducing that. I'm actually a Florida homeowner. I've gotten multiple flyers from insurers saying, you want a new roof, just sign over your rights to us and we can help make your insurance company pay for it. It's a tragedy, and a lot of states are doing the right thing and cracking down on that to protect consumers.
And it's for the audience out there, for all two people that are actually very interested in this issue and watching on C-SPAN right now. Essentially, this is like the windshield policy, right? Where you get, I'm sure all of us, especially in Arizona, we have a lot of windshield cracks all the time, but people will literally come up to us and say like, hey, do you want a new windshield? I'll actually pay you cash. This is kind of the same concept of that.
Exactly the same concept. That's been another big area of fraud. Thank you for raising that.
So how do insurers detect inflated or fraudulent claims stemming from AOBs then? Minus obviously on the regulator side, but what about on the business side?
Well, this is one area where artificial intelligence is going to be very important, as insurers are increasingly using that to detect patterns of fraud and work with the regulators and the law enforcement community to go after that. But it's going to be an ongoing challenge. It really does help when the states get involved and have the right laws in place to protect and prosecute that kind of abuse.
Great, thank you. Yield back, Madam Chair.
Senator Blunt Rochester.
Thank you, Ranking Member Warren, and also thank you so much to the witnesses for being here today. Rising insurance costs are a hidden driver in housing affordability crisis that we're facing today, and this hearing is a chance for us to examine how climate risk, market instability, and federal policy are making it harder for families to afford and maintain a home. The skyrocketing cost of housing is a top priority of mine. As we all know, you can't own or buy a house without insurance, and the costs are rising, not just in Delaware, but across the country. In fact, my first bill as a United States Senator is focused on housing, the Housing Supply Frameworks Act. And I introduced this bill with Senators Crapo, Fetterman, and Tillis, and it has broad bipartisan support. And this bill is really about increasing housing supply and production while cutting red tape, looking at zoning, and providing options to municipalities and states. But we know there are many factors that are driving insurance costs to increase. As you noted in your testimony, Mr. Gordon, frequent and severe disasters, growing population in high-risk areas, and the higher rebuilding costs are just some of the significant contributors. One of the factors I want to focus on is tariffs. I joined Ranking Member Warren in leading a letter to the President today highlighting this just disastrous trade policy that home builders say could increase the cost of a new home by over $10,000. Yeah. But the tariff impact doesn't stop there. Insurance is also about future risks and the future cost of repairs. Mr. Gordon, I know that there are many factors, but can you speak to the impact of tariffs on your ability to set prices today?
It makes it extremely difficult, particularly because of the uncertainty involved. So as you indicated, we estimate the average cost of a new home could be increased by more than $10,000 from the tariffs. They could be very significant on the auto insurance side as well. But my actuary is pulling out what little hair he has left because it keeps changing every couple of weeks, and I keep saying, well, what's today's estimate? So he's currently back at the drawing board. But it does make it very difficult to price, and because insurers, there's always a lag time where insurers have to identify these trends, quantify them, file with the regulator, wait for the policies to roll over. That takes quite a bit of time, but we have to make our best estimates at any given moment on what that cost is going to be, and it's very challenging.
I think the key word that you used there was uncertainty. And just to be clear, you're saying that even the announcement or of tariffs can cause uncertainty and also can cause premiums to rise today. That tariffs and the uncertainty costs my constituency are real money today.
That's correct, and of course the cost will be a lot lower if they're short-term, and insurers will make adjustments, but because of the lag time, insurers have to make ongoing decisions, and that does roll into the cost for a number of individual insurers.
Could I shift gears here to Ms. Pyska? I want to shift to insurance pricing to mitigation. I want to emphasize the critical role that the federal government has in reducing risk before disasters strike. Investments in mitigation save lives, protect property, and lower long-term costs. That's a win for families and for insurance and for taxpayers. And unfortunately, we are seeing the opposite happen. Ms. Pyska, are there changes that are affecting your work on the ground, and what does this mean for your ability to plan, budget, and protect your community?
So thank you for the question. We have a very old housing stock. So most of the houses were built before 2008 when they had the higher codes to withstand an event. So our problem now is going back to those communities and hardening them, hardening each home, having defensible space, having safe evacuation routes, fire breaks surrounding those communities, and forest health projects in the watershed. And so that's what we've really spent the last 10 years building up a workforce to do that work. And with the funding freezes now, that workforce is in jeopardy and all of that work is compromised.
I have a lot more questions, but I see, I don't know, did the time change on this? I'm down to 10 seconds, so I have more questions that I will submit for the record, but thank you so much to all of the witnesses, and I yield back.
Senator Warner.
Thank you. Ms. Ranking Member, is that what we call Madam Chair? Okay, whatever. And I'm, Mr. Gordon, I'm going to start with you, and I'm sorry I'm going to follow up on my colleagues' comments, and I appreciate your comment about the complete uncertainty, the fact that these tariffs could end up costing about $10,000 for a new home. And one of the things that's pretty stunning, well, not directly on this issue, is I'm was chair of the Intel Committee and now vice chair. There's not a day that goes by that we don't get additional reports that nations around the world are starting to view China as a more reliable trading partner than the United States of America. I mean, just let that sink in for a minute. I mean, we've spent 15 years trying to warn against the challenge of China, authoritarian regime, stealing intellectual property. But in 100 days, China now is viewed as a more reliable trading partner. And we have literally seen work that was done by the Biden administration, the first Trump administration, the Obama administration, going back to the Bush administration, where we've tried to say to nation states around the world, beware buyer beware about doing business in China. I just, and I know this has been asked, and you've talked about the uncertainty, the chaos. I just want you to drill down a little bit more when we think about things like lumber prices going up. Doesn't this also affect the rebuilding costs if a home were to be destroyed? That is another reason that we're driving up these costs of home insurance because of not only the building of new construction, but the rebuilding. Can you address that?
Yes, Senator, and particularly Canada, Mexico, and China is where a disproportionate percentage of the lumber and cement and auto parts come from. And so our trade relationship with those countries will certainly impact the prices. And to the extent those tariffs are there, the longer they're there and the higher the rates are, then the more expensive the insurance is going to be for building and rebuilding.
Yeah. I also want to, and I'm sure he's been mentioned, but one of our colleagues, Sheldon Whitehouse, has spent a lot of time on this and I think deserves, at least for me, he's really helped educate me. He's also scared the hell out of me about what we're going to be seeing coming forward. I just want to acknowledge, in Virginia, we have the Norfolk Naval Base, and one of the largest naval bases in the world. Literally, our Navy spends tens of millions of dollars a year, sometimes hundreds of millions, raising the piers because of climate change. If our own military is acknowledging that this is a reality, they wouldn't be spending this money if it wasn't. And I'll give this to you, Mr. Gordon. With the changes, and if we want to call it sea level rise, climate change, we can call it whatever you want. Isn't this as well affecting dramatically the cost of home insurance?
So, Senator, there's two different issues I want to unwind in what you're talking about. One is insurers are very concerned about aging infrastructure and how increasing climate risks are an increasing danger to that infrastructure and how that can affect risks. On the other hand, in terms of the property insurance overall, Virginia is a very well-regulated state. And so what we've seen is that the residual markets in Virginia have actually shrunk, meaning that the availability has been very strong in the private markets because of how well they're regulated, and there are fewer and fewer people over time that have had to go to the state backup funds.
But let me also just say, I can tell you because I hear regularly, because of the level of flooding that's taking place, we have a church in downtown Norfolk that has to change its schedule about once a month because it gets flooded almost on a monthly basis. That didn't happen 20 years ago. And again, the refusal to accept science around this just baffles me. One last question, I'll be happy to have anybody weigh in. One of the things that I think we ought to do is we have to be prepared for what's coming, and that means resilience. The United States Chamber of Commerce, not exactly a flaming liberal organization, has said that for every dollar invested in resilience and disaster preparation, in the long run saves $7. Yet this administration recently has canceled a lot of resiliency projects in our most rural part of the state, Southwest Virginia, that got hit by Hurricane Helene. Does any one of you, and I know, some of you are viewed as Republican witnesses, some are Democratic witnesses, but any of you want to try to defend cutting resiliency grants as a smart way to address, and again, we can call it, if you don't like the word climate change, call it whatever, but the level of storms and cutting resilience dollars, does that make sense to any of you? It makes sense in a certain way, which is we should just stop subsidizing all of this stuff and let insurance prices, but also all terms, adjust to the actual risk. We just need a free market in insurance. But sea level rises, by the way, are 1 foot a century right now, so you just have to be careful about the magnitude of these things. It's very important. Sir, I'd ask you to, have you looked at the Navy budget on any basis and the amount of money they're spending? I've looked at global sea level rises, which are very slow. Sir, I'd ask you to look at the Navy budget and look at how much money we spend every year. You may say 1 foot a century. That is not the case in Hampton Roads in Virginia. And if you don't have that kind of knowledge, I don't know how you can claim to be any kind of expert in this field. If it's more than one, it's a local
factor.
But if you're also saying, let's get rid of any resiliency protection and let the market price that, under that kind of free market approach, let's also get rid of the military and let us all just price in those costs, because a free market would not spend money on preparation. I think it's an absurd answer.
You need a military to protect the market.
Senator, your time
My
has
time is expired. I would add to
Senator
my colleague, LBR, I'd love to follow up for some additional questions. Thank you.
You bet. Senator Alsobrook.
Well, thank you so much. Don't worry, Senator Warner. My question's similar to yours, so we'll just continue that point. I want to thank Ranking Member Warren for holding today's hearing, and certainly want to thank each of the witnesses for being here. My first question is directed at Ms. Pyska. I'm sorry, Pyska. I know that you have served as county executive. I also, previous to this role, served as county executive. And leading a local jurisdiction in Maryland, I saw firsthand, as you have, the devastation that flooding from severe storms can cause. There were even times where we had to send our first responders into communities in boats to rescue residents who had become stranded when the waters rushed down their streets and into their homes. In Maryland alone, there is $150 million worth of flood mitigation projects that have now gone, they're now going to be canceled as a result of the cancellation of the Building Resilient Infrastructure and Communities program at FEMA. 2 of these projects, very, very heartbreaking for us, are in a place called Crisfield, Maryland, which has helped an entire town protect their residents from the storm surge as high as 5 feet helping to ensure that they can withstand severe storms. So I'd like to ask you, Ms. Pyska, from your perspective, as someone who has been a victim of natural disasters as well, how harmful is the cancellation of the BRIC program?
Thank you, Senator. As I mentioned earlier, our county is rural, economically challenged, and we haven't had the resources to yet apply for BRIC, but we've been working towards it as our goal. But the counties to the side of us, the south and the west, Sonoma and Napa, they're much more affluent and they have the resources. They have applied for and been awarded those grants in 2021. And they've done substantial amount of planning to highlight what will harden their communities from wildfire. Now that they're at the point of implementation, those funds are now terminated. So they are, as I said earlier, dead in the water with all of the plans that they've been working towards resiliency.
And similar to you in Maryland, I mean, what's so devastating is that our towns and cities actually apply for these funds. They spend years planning, and these not only make them safer through flood mitigation, but it also contributes significantly to their economies. And so canceling is absolutely catastrophic in many of these areas and absolutely irresponsible. Now, Mr. Gordon, in light of these cancellations and the potential overhaul of FEMA, which could drastically change the National Flood Insurance Program, would you also share your thoughts on the role of the federal government and what you believe that role should be in helping to stabilize the market and keep all of these costs in check?
Yes, Senator. FEMA plays an enormous role in that regard. Flooding is the most common natural disaster. While there is some limited private flood insurance, the private market couldn't hope to take on the 4.7 million homeowners, families that rely on the NFIP that's run by FEMA. FEMA also does a lot of great work in natural disaster mitigation, making sure that communities are adopting flood mitigation measures, creating flood maps. Those are all really essential to help protect communities against flood, and we strongly support the continuation of those programs.
Thank you. And then finally, one more question for Ms. Pyska. In addition to illegally restricting congressionally appropriated funding, the Trump administration has proposed dramatically overhauling FEMA, including by possibly quadrupling the amount of damage a community must suffer in order to receive federal aid. FEMA oversees the National Flood Insurance Program, and Maryland has about 63,000 active flood insurance policyholders. So let me be clear, any lapse in the federal flood insurance program would be harmful to Marylanders. And would you just comment on how harmful it would be for your county if a FEMA overhaul threatened the administration of the flood insurance program?
Thank you, Senator. Yes, it would be extremely damaging for the future of our county and for all of the communities. Most of the communities surround the Clear Lake, which is in the center of our county, which is the largest natural lake in California and the oldest freshwater lake in North America. So all of our communities around the lake rely on the NFIP. So we need that reauthorized.
Thank you. I yield. Thank you so much, Ranking Member.
Thank you. So in closing, I want to thank all of our witnesses for being here with us today. I know that some of you traveled from out of town, and we are very grateful for your taking your time away from your families and your work to come here and share your testimony with us. Insurance affordability issues continue to be important to this committee and to all of the states that we represent. For senators who wish to submit questions for the hearing record, those questions are due 1 week from today, Thursday, May 8th. To our witnesses, you will have 45 days from that day to submit your responses to the questions for the record. Thank you, and with that, this committee is adjourned.